One of the things that we've been talking about a lot right now is national market. We know there is no national real estate market. It's all
Yes.
about a local market and local knowledge, right? So you as the kind of speaker box of like the master of the local real estate knowledge here in Jacksonville, what can you tell us about investor activity and all this stuff going on in
Yeah,
Jacksonville
so
right
I
now?
pulled the data for Jacksonville, and what I found is that investor purchases were roughly the same in 2024. The percentage of total purchases was actually higher in Jacksonville in 2024. So that's that market share that they were talking about. But I think it's really interesting when I dug into the data that I'm going to share with you in just a second to see who is buying, what type of investor is buying the majority of properties.
Nope, here's the data, buddy.
Well,
Let's
here we
talk about
go.
it.
So this graph on the charts on the left, on the top there, it's talking about the number of investor purchases. And so you can see there that I go back to 2023 to 2024, and you see those little bars, they're kind of up and down with a little bit of a seasonality thing. So it's largely the same. If you go year over year, it's hard to get more of the same than you can by looking at that chart. And then the chart right below it there is talking about this market share that we haven't talked too much
Mhm.
about. But yeah, you can see it's slightly going up over the last 2 years. So the amount of purchases that investors are making is roughly the same over the last year, and the percentage is actually going up. A different reality than what you might have concluded if you were an everyday investor reading the Redfin article and thinking that that was all of Florida.
Correct. Another one that you kind of pointed out to me here is this idea that the majority of the investors are these like 1 to 9 property investors, which is us, right? Like
Yeah.
which is us on the Not Your Average Investor Show community. What does this chart say about
Well,
us?
I'm so glad we have an opportunity to dive a little bit more into this chart because I
Yeah.
think we can bring some data and perspective to a couple of things that have been brought up on the show over the years. And one of the things that has been brought up on the show is that these large institutional investors are invading single family rental properties and own 30% of the market or more. And there's a lot of fear of and angst that is brought with that narrative. So I wanted to share this with you. First off, let's look at the top there. It's looking at the amount of investors that own over 1,000 properties and what is their proportion of ownership of the entire population in the country of single family rental properties. And at the top there, you can see that these institutional investors that own
Mhm.
over 1,000 rental properties, guys, they're only 3% of all single family rental properties that are owned nationwide. So it is not 30% or even higher, as has been reported. It's 3%. So we need to kind of keep this in perspective. I think this is important because I'm not saying these institutional investors are all great, but I'm also saying that they're not the big bad wolf that we need to be concerned about on a daily basis as far as changing our own investment strategy. It's just a good data point at this
Mhm.
point. Contrary to that, on an individual market, talking about, actually, ancillary to that,
Yeah, 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 yeah.
in this, for those investors that own over 1,000 properties, the thought has been, well, what happens like in a market like Jacksonville if these institutional investors own such a high percentage?
Mhm.
What could happen if somebody who's sitting behind a desk owns 20,000 single family rental properties and just decides I'm out, and then they just throw 20,000 single family rental properties on the market and the market crashes overnight?
Yeah.
You remember, especially this was something that was brought up 2 years ago
Yeah.
as,
Yeah. 2020, late 2021, stuff like that, early
yeah, 2,
2022.
3 years
Yeah.
ago, for
Yeah.
sure. That was the narrative.
Yeah.
Well, I wanted to share this with you because in Jacksonville, large investors do own a proportionally higher share of single family rental properties. It's 21% in Jacksonville. But I'm here to tell you guys that this narrative, and this is what I said 2 years ago and 3 years ago, I said, guys, these large scale investors see the value of the Jacksonville market. They want to put their money in the Jacksonville market
Mhm.
for a reason. And they are here to buy and hold because at the end of the day, they feel like this asset class is better than where they could put their money elsewhere. And they've set up all of their operations to be here for the long haul. So I didn't see a big risk that there was going to be a huge sell off or that it was going to lead to a crash. Obviously, we've forecast that home values were going to continue to go up, and they have. So there has been no large sell-off, even though this has been 2 or 3 years of ownership. And I think it's important to note that there would have been a lot of reasons to potentially do that.
Yeah.
Think of interest rates being a lot higher for longer
Yeah.
than any of us really expected. The complications of an incoming presidency, the complications of the geopolitical strife that we have with the wars that are affecting all of us, supply chain challenges, the talk of recession now.
Yeah. Plenty of reasons around. There was a white collar recession and all these other things that came down the pike.
Been through a lot.
Yeah, we've been through a lot. At the end of the day, these folks are here to buy and hold. I would even say that I bet you most of these, I have nowhere to stand on this, but like I'm assuming that these institutional investors are disciplined investors. I would assume that they have locked in really good rates, and they're not going to want to move off of those rates. So it's gonna provide a stabilizing force of like these folks aren't going to have to move, right? Like they have this like rate that's locked in, that's almost a cash flow generation all unto itself by having these low rates. They're going to be here for the long haul, and that's going to provide a high floor for the market.
There is. It is going to provide a high floor for the market. And that's one of the benefits of having a large institutional base. The chances of there ever being another 2008 crash when you have high institutional presence in a market is it's a lot lower of that ever happening going forward. So there's pros and there's cons. And I'm not saying one is all right and all wrong, but what I'm saying is that fear mongering of saying high institutional presence in a market leading to a large sell-off and a large crash hasn't materialized. I don't see it materializing. And what I think it does is it reinforces the topics and the concepts that we talk about on this show, that we all believe in this community, that this asset class is great. And buying and holding in a growth market makes a ton of sense. That's what the big boys and girls who are controlling hundreds of thousands of homes are deciding. And look at where they're putting their money. It's in Jacksonville. And that's where we as a community are putting our money too. So I feel great about it.
Yeah, makes sense, man.